Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 3rd of Feb. All right, just looking at the where we start the week of trading. This coronavirus is getting a little bit more traction across the board. Obviously, the yuan being directly impacted, Aussie and Kiwi also sort of tumbling on the back of the spread. Now, sterling, it's rallying to the top side. Bit of euphoria over the Brexit finally being completed after the election. Pretty positive tone in the UK market. But this is where the risk on, risk off trade is revolving around. It's all around the coronavirus and it impacting. If you scroll down through the news, you'd also find bits and pieces about Trump's impeachment, but that seems to be a bit of a joke at this stage. All right, let's just have a quick look at the charts, see where things are now. Just having a look at the technical aspect of the currencies. Just looking at the Aussie, you can see pretty clearly what's happening. Aussie and Kiwi drifting lower. Now, Euro and Sterling higher. These four pairs, the Aussie, Kiwi, Euro and Sterling, should generally be correlating. They're not. And that's the impact, the independent impact of that Chinese coronavirus issue. Bit of a safe haven play Friday, buying yen. Now, that seems to have dissipated. It's like the whole situation we've been experiencing with geopolitics the last year. You know, you get a short-term move and then everything sort of freezes. So just be careful what happens here. And also dollar CAD moving to the top side. Now, looking at those charts, you'd be pretty chuffed seeing that sort of setup. But the devil is in the detail now. These are all geopolitically driven from what I can see, right? So just having a look at the data from Friday, and this is where you can sort of see where things should be. Slightly weaker GDP numbers out of the Eurozone. So really, should the Euro be higher? Not exactly. You look at the US numbers, slightly weaker personal income and consumption numbers. The PCE price index, slightly higher, but really overall either neutral or no move in the dollar. And if you scroll down a little bit further, look at the Canadian GDP numbers, a little bit stronger than expected. If anything, CAD should have rallied. So you come back and look at the moves on the currency pairs. They don't match up with the fundamental drivers, right? So this is where you need to be very careful because those geopolitical issues that are pushing these currencies around at the moment can stall very quickly and move in the opposite direction. So just be aware if you are looking to get into these, look very closely at what is impacting what. And the best way to do that is if you have a tool like Refinitiv, you can start to really isolate where the risk is, whether it's risk on, risk off. Now, to me, straight away, seeing the Dow Jones, the US equity market's down 2% or thereabouts on Friday, that's going to set up a pretty negative day for the Asian equities and also the European equity markets. So risk off. Now, with risk off appetite or profile, this is from Friday. Don't forget, this is Monday. You're really looking at these should all be red. You'd expect all the yen and yen crosses to be red. Now, that's not the case. What we have to wait for is the US North American markets to open up and give us the direction once again for Monday. But looking at where the correlations are at the moment, they aren't quite anywhere near as high as last week, but still obviously gold in play. You've got Swiss. This is with the equity markets, of course. Equities at the top, currencies on the side. Let me just clear the screen. So looking at where the main action is, and it's pretty much obviously Aussie yen and Kiwi yen. Now, yen being the safe haven, Aussie and Kiwi being the biggest impacted currencies on the Chinese situation. So, of course, Aussie yen and Kiwi yen are going to be moving very closely with the equity markets, and they are the two pairs that are in the 90s. So keep a close eye on Aussie yen and Kiwi yen. That's where I think the volatility is going to be and the potential moves. The hardest part is trying to read into the market when the next announcement is going to be about the whole virus situation. So all you can do at this stage is plan around those opportunities. So if you are looking at the news, by the time you read it, it's too late. All right, that's the biggest problem you're going to have. If anything, you can be looking at, if I just get that risk profile back up, you'll see here, if anything, you can watch the quick release news. This is where updates come straight in, and then they become articles over here. So keep an eye on the major news as it's rolling out. Right, very hard to trade around those events. And if I just bring you back to the MyFX Trading Hub, okay, just having a look at the upcoming calendar. There's only one thing to really keep an eye on today. That's the ISM manufacturing data. Okay, it's not out for another 10 hours. Keep your eye on that. And when we do look at the overall market, you're looking at the market conditions. To me, as much as they look like they're sort of trending, they're pretty average, and they could turn very quickly. And that's primarily, once again, because of the market drivers. We've lost the Brexit issue. We've now got the Trump impeachment and just the China virus concerns. All right, so that's where that action is. And if you're looking at the technicals, they are lining up with the major sort of oscillators out there. You can see the dollar index lower, dollar yen drifting lower. Dollar Swiss, to me, looks like a very good sell. Once again, it's on the safe haven trade, which could turn around in a day like we've seen. So just be careful with that one. You come back down to the pairs underneath. And this is the confusing part. You should be able to see warning signals here. If these pairs aren't moving the same way, there's distinct problems in the market. So sterling and euro topside and Aussie and Kiwi downside. That's not a match up. So trade the pairs in isolation. Don't look for your correlations. That's the key part to take out of that. All right, guys, bit of a tricky Monday start, but opportunities there. Should be plenty through the week. If we do come back to the calendar, you'll see the obviously the first week of the month, non-farm payrolls on Friday. Huge amount of data coming out, RBNZ and a few other things. But the FOMC minutes, of course, Aussie employment numbers. And if we get right down the bottom, actually, it should be next week, actually. Oh, yeah, it's the last week of, the start of the Feb. I've got this on a month view now, which is confusing me somewhat. But just looking at the key data as we go through it, the non-farm employment change, obviously on the 7th, is going to be the key. Bit of a bummer that the Canadian employment numbers come out at the same time on the same day. That's going to create some issues there for dollar CAD. But have a look through the calendar. It's a big week of data. I would be just letting the markets open up. You really want to see, to me, what the US or North American equity markets do. This will be the lead for the markets to start the week. All right, guys, that's it from me. Have a good one. Cheerio.